Sir, if it comfortable, we are starting in 2 minutes.
Okay, no issue.
Yes, sir.
Garg Sahab, good morning.
Good morning, sir.
Ibrahim?
Yes, sir.
Yes.
Sir, if you allow, we can start the session.
Yeah. Garg Sahab, shall we proceed?
Yes, sir, we can very well.
Yes.
Yeah, Nitisha, you can start.
Yes, sir. Warm greetings to everyone. Hope you all are well and safe. I, Nitisha Dhariwal, on behalf of JMVD Legal, take this opportunity to invite our renowned guests and participants to this webinar. Today, we have gracious presence of stalwart of direct taxation to enlighten us on 360-degree analysis of important amendments in direct taxation introduced via Finance Bill 2022. This webinar is organized by JMVD Legal in association with Law Internships and Indian Lawyer Association. Let me take the privilege to introduce our organizing firm, JMVD Legal. JMVD Legal is full-fledged law firm in Central India, having a team of advocates, chartered accountants, company secretary, insolvency professionals, and trademark and patent attorney. We are the only firm in Central India providing end-to-end services to major corporates, governmental authorities, departments, public sector banks, etc. in the field of direct, indirect taxation, commercial laws, corporate laws, insolvency, intellectual property laws. From last 25 years, having its base presence in Indore and associated offices at Mumbai, New Delhi, Kolkata, Prayagraj, Ahmedabad, Bangalore. We hold a large chunk of clients and few of them have a globally recognized presence. Our core competency lies in litigation services, consultancy services, IPR and commercial departments. So today, we have the privilege to have among us eminent personalities to hold a discussion on the topic important amendments introduced via Finance Bill 2022. It gives me immense pleasure to introduce our renowned panelist, Shri Anil Kamal Garg, sir. Sir is a practicing chartered accountant having experience of more than 34 years. He is the senior partners of Mazars Anil Kamal Garg and Company, which is the most leading firm of chartered accountants in Indore as well as in Central India, with as many as 12 chartered accountants and 2 company secretaries. Firm is rendering services in areas of direct tax laws, indirect tax laws, audits, company affairs, arbitration, and banking. The core practice area is direct tax laws. Sir regularly represent his clients, which inter alia includes big corporates and quasi-governmental agencies before income tax authorities, appellant authorities, income tax appellant tribunal. He is also an academician and a regular contributor of articles in various journals and newspapers. He holds various positions as office bearer in managing committee of Indore branch of CIRC of ICAI. He was appointed as a director of local board of State Bank of India in Madhya Pradesh and Chhattisgarh on the recommendation of Ministry of Finance, New Delhi for a period of 3 years, commencing from 1st July 2013 to 30th June 2016. He has also been recognized arbitrator on the panel of Indian Institute of Chartered Accountants of India. We warmly welcome you, sir.
Thank you.
Our next panelist is Shri V. N. Dubey, sir. Sir is a managing director of firm JMVD Legal. Sir is an advocate by profession. He is corporate and tax attorney, being in profession since more than 30 years. Sir completed his law from University of Calcutta in 1989. He is a senior fellow company secretary and registered insolvency professional. He has been providing advisory and litigation services to various public sector banks, governmental departments, major corporates since more than 30 years. He has been in the Standing Council of Income Tax Department at MP High Court from 2017 to 20 and currently serves as the Central Government Senior Standing Counsel for Central Board of Indirect Tax and Custom. He holds panel of various banks and as advocates and insolvency professional, including State Bank of India, Union Bank, Canara Bank, Bank of India, Central Bank, Punjab National Bank, IDBI Bank. We warmly welcome you, sir. Next, I would like to introduce the key moderator of this webinar, Shri Ibrahim, sir. Sir is an advocate with a specialized practice in taxation, insolvency law, commercial matter, civil and criminal laws. He holds litigating experience of various courts, tribunals of the country in various important matters. In his LLB, he holds a gold medal and has an added blend of expertise in business law by having a LLM degree in business law. With this, I would like to hand over the podium to Shri Ibrahim, sir, for initiating the panel discussion further. Thank you, sir.
Thank you, Nitisha, for your kind words. Today, we are here for discussing and analyzing the important amendments in direct tax through Finance Bill 2022. It's absolute delight for me to moderate this session. When you are luminaries and veteran like Mr. Anil sir and VN Dubey sir, it's quite honest that the only thing I have to do is to ask the question. Before starting a session, I would like to ask some quick question to our panelists. Sir, anyone that what is your overall view on the budget, whether it passed the mustard with you on the side as compared to the past budgets?
Dubey sir, your valuable
Yes.
comments first.
Yes. Thanks. Thank you very much for our organizers for giving us the opportunity. And just coming to the budget, I think as for the first time in the history, we have taken the number of positive points of the budget. It is going to be good for the economy and it may impact in the growth. And first time the political agendas, which is normally being dealt with the budget, that is the missing. And it is the growth oriented budget as an economic law student. That is my thought process. And coming to the core topic of taxation, both in direct and indirect taxes, again, we feel it is the balanced budget. There is no changes in the rates and all these. Except the certain minor issues, which I think with the veteran Anil Garg Sahab, we will be taking it forward. But I think in some extent, I take it as the balanced budget and it should be good for the economy in that way. Thank you. Over to Anilji.
Thank you, Dubey ji. First of all, I would like to thank the organizer for giving me this opportunity to share my views on the various amendments made in the direct taxes. And I would also like to express my thanks to Nitisha for giving good words for which probably I am not entitled to. And I'm really feeling privileged to share this forum along with my learned friend Shri VN Dubey Sahab. So far as the budget is concerned, to my mind, I fully endorse the views expressed by my learned friend. Then this budget can be said to be a growth-oriented budget. It's a progressive budget and it's a balanced budget. And certainly in this budget, although there are the elections in the 5 states, but the government kept himself away from taking any political benefits from this budget. They did not make any attempt to make it a populist budget. As we all would appreciate that our government, the central government on the revenue front is doing very well. In the last month itself, we could register GST collection of more than 1,40,000 crore rupees. And in time to come, certainly our revenue on both the fronts, direct taxes as well as on the indirect taxes, are growing at a very fast pace. The credit for this tax collection can be given to the growth in the economy, and as also to the various laws framed by the government to plug the various loopholes. As we all are aware that the GST laws have been made more stringent and more checks and balances have been imposed. So our revenue collections on that indirect taxes are getting increased month by month. Despite the COVID impact, we have seen that there was a tremendous growth in the last couple of months. And so far as the budget related to a middle class or to a lower class is concerned, our finance minister has said that if I have not increased the tax burden, then it's a great relief to us. So we should accept her words that by not increasing the burden on the common taxpayer, she has indirectly helped all of us. And so, according to me, it should be called as a very balanced budget, and we as a professional should make our all the endeavors to cooperate with all the new visions and all the new policies which are being framed by the government. Thank you.
Another question I would like to ask before starting the session, that anyone of you, sir, one amendment in this budget which you feel should not found a place in the document, or which will open up plethora of litigation for assessees. Any one amendment.
I think we as an advocate, sir, as a litigating counsel, we may create any issue for litigation. I think it is we cannot blame only the government, only the legislature for that. So I think that is one part, but certainly some of the issues which is still creating concern for me, which can be taken at the threshold litigation, as you pointed out. According to me, Section 68 amendments was unwarranted infusion. Over the years, it was already there and it was in the practice. It was unwarranted. With the unwarranted infusion of taking the source in respect of unsecured loan provisions, which were introduced earlier for the share capital, I think this may create more issues and more challenging and more encouraging steps from the assessing officer point of view, which may create, certainly the Section 68 is the bread and butter of the litigating counsels. That is the good. And with the clubbing of 115 BBE, it made the case more interesting with the 77.25% of taxation. So I think so this may encourage, this may go beyond the normal loan creditor. According to me, if the law is not being addressed properly, so I'm concerned with the lot of unwarranted cases may be booked even in the hand of the banking companies as well. Banks and institutions, there is no exclusion. How they are going to ask and to whom they are going to ask and how the assessing officer is going to take that view. I think when we will be taking valuable input, but according to me, this may be increasing the Pandora of litigations as per that. Since Ibrahim has given me only one choice, Then second, what can be the most litigating? Over to Anil Garg Sahab. One more most litigating to whom we can think it can create more litigations as a litigating counsel for us. That can be pointed out by Garg Sahab.
Thank you, Dhruv Sahab. But before commenting upon that, which would be the most litigating provision of this amendment, I'm really, it's an interesting amendment to tax the cryptocurrency. But I would first
Yes,
deal with that.
yes.
That when at the one hand the government is claiming that this cryptocurrency, the prevalence of the cryptocurrency in India is not legal one, but despite that, they have brought a specific provision to tax an illegal activity. So in future, you may find that for many illegal activities like the activity of the smuggling, or even for a pickpocketer, the government may think that a pickpocketer is not showing his income properly, and for that purpose, they may bring probably some dimming provision that they may say that for each day it may be presumed that you have picked the pocket for that much amount and you will be taxed in that fashion. So it should not be the ideology of any government. If any activity is recognized by the government as an illegal activity, then to make any mention of those activities in their statute. According to me, directly or indirectly, you are supporting those activities, because the government wants to become a partner of the illegal activity. They are saying that, see, this is an illegal activity, but even if you earn it, then you keep 70% and you pass on the 30% to me. So this is the illegal activity. And so far as the most litigating provisions are there, as you rightly pointed out, you have picked up the words from my mouth that the provisions of Section 68 would be the most draconian provisions. The amendment which has been made would be proved as the most draconian, although a corresponding amendment in respect of the share capital has already been made in the Act way back in the year 2012, when the share capital, share application, and share premium money were brought to the ambit of by way of insertion of a provision to Section 68. But now they are covering all the loans and advances, then probably it would not probably impact the big businessmen, because in their cases they are always making a very structured financing from the banks. So they may not probably be required to face the rigor of this new amendment. But for a ordinary businessman, for the middle-sized businesses who are not availing the bank facilities, are not in a position to get that much credit facilities from the bank, then they are compelled to avail or to borrow the funds from the market. And if they borrow the funds from the market and if repay it, then even after 2 to 3 years, they will have to face the music of this provisions of Section 68. So probably, but there can be only one provision, undoubtedly, undisputedly, that this is the amendment made in the Section 68, which can be called as the most draconian provision.
Yes, just to supplement with I'm concurred with the Garg Sahab as for the making a special provision for virtual digital asset, that is the cryptocurrency. But my thought process that although government is empowered to tax any income, whether legal, illegal, anything, but for that purpose, whether really the specific provision is warranted in the act, even otherwise, if it could have been taxed without introducing in absence of this particular specific provision, it could have been taxed. So I think I'm just concurring with the view of the Garg Sahab ki why you want to mention the specific thing which are per se illegal according to you. Are you going to make a specific provision in that? Then the persons like me as an advocate, when I'm dealing with those specific laws, I may be able to argue that government itself proposed this provision is income tax. That's why I am justified to do that business. You cannot stop. If you are going to make me penal action in any other law, so I think this particular insertion is unwarranted. That I am concurring the view of the Garg Sahab. Yes, Ibrahim, please proceed.
Yes, sir. One last question, and on a scale of 1 to 10, what you give to this this budget?
I think Garg Saab is the veteran chartered accountant. Marking from his side would be the best for me. And I will support the marking of the Garg Saab.
I'll give 7.5.
Very good. Thank
If
you.
sir gives it, it actually
It
means
is a distinction. It is distinction.
yes,
Mark.
yes, sir.
It is distinction of my era of studentship. At present, 75% is not a good mark. The students like Ibrahim now is scoring more than 95. But in our era, 75 used to be the very good mark. That was distinction, Garg Saab, at that time. So I am happy with that distinction. Chale, please.
Yes. Sir, now I would like to share the PPT, and so as it can make a flow for the discussion. Uh, the PPT is visible?
Yes, yes.
Before starting this, I would like to give quick view for the sequence of topic which in this session we are going to deal. First, we will start with the retrospective amendments. As we see that more than 8 amendments in this budget are already going to be applicable retrospectively from 1st of April 2021, and one is going to be effective from 2005. And we are going to see how the government view has been changed. Thereafter, we'll deal with the provision as to updated return. Thereafter, assessment and reassessment provisions. Certainly, some of the proposal which the finance bill wanted to make it. Thereafter, amendment relating to faceless assessment. Provision relating to cash credit, section 68 of the Act, amendment relating to business restructuring. Thereafter, we'll move further with TDS and TCS provisions. Thereafter, expenses incurred for exempt income, that is section 14A, which I think will further open the Pandora of litigation. Thereafter, taxation regime for virtual digital asset, and thereafter we'll conclude with charitable trust. Now, I would like to start with the first thing, that is retrospective amendment. We have saw that government stand on retrospective amendment post Vodafone International Holding BV versus Union of India and others case has been drastically changed. They have enacted the Taxation Laws Amendment Act 2021 to nullify the retrospective taxation that was introduced with the Finance Act. Despite of the strong view against the retrospective amendment, they have made more than 10 proposed 10 amendments which are going to be effective retrospectively. So one is that treatment of cess, clause 13 provides that. So I request Virendra sir to kindly throw some light on this provision, sir.
Yes. As far retrospective amendments comments on that, certainly this budget is having the least amendment as far the retrospective amendment. I think Garg Saab will concur my view over the years what we are seeing. And except the 1 or 2 amendments, most of amendments are maximum retrospectivity is being thrown to 10 months or so. So I think, but issue is that it is not the key how much retrospectively and whether it is what is the legality and all this. Certainly the being physical legislation, being the central law, it is very difficult to challenge those retrospectivity, and we are having a lot of judicial precedences to sustain that. But my only submission as a tax consultant in the matter is if the government itself came in 2021 with the nullifying the effect of the Vodafone judgment, and government itself shown its commitment we are not era of retrospectivity is over in now in India to give the message across the globe investors. I think for this, even this cess matter, whether it is the legal, illegal, how it will sustain, whether the judgment of 2 high courts, which is the differently taken opinion by Calcutta Tribunal. All these are by taking the pretext of some Supreme Court. That is the another way. Even our memorandum is saying to have the Supreme Court and all these. I think in my humble view, taking it to retrospectivity, they would have gone to, would have left to the normal judiciary to decide whether it is the right or wrong. If you are itself taking the help of those judicial interpretations, so why want to make it the part of a statute book? Incidentally, when I was going through this memorandum, the most of justification they try to make from judicial precedents. So I don't see, if you are having some judicial precedents and if according to you, this judicial precedent is the favorable to revenue, but what is the need of imposed that judicial precedents by way of legislature? So to that extent, I'm having the difference of opinion in the matter. It is not matter how much the cess is going to create the revenue, how much this particular issue is going to impact the SSE. It's matter whether this conduct is going to give a wrong message to across the investors across the globe, number one. And then second one, whether it is going to issue the new era of thought process. Yes, now I have done 2005. This 2005 amendment retrospectivity may unnecessarily create a new culture of, again, we may be going back to what we were doing from over the years. This is my serious reservation. Again, going for 10 months in so many places, some number of cases, except the some of amendment are even the favorable to the SSE also. But as far the favorable amendments of retrospectivity being the king, you are supposed to give that retrospectively. I think there was normal and part and parcel of, but as far the levy and making additional hardship and levy of any additional taxation, I think that should have been avoided. This is my small submission in the matter. Over to Garg Sahab.
Thank you, Dua Sahab. Yes, certainly in this budget, many amendments have been proposed with the retrospective effect. The Lordship of the Honorable Supreme Court in the case of Vatika Township has condemned that normally a levy should not be imposed on any subject with the retrospective effect. So there should not be any retrospectivity. But here, arguing from the revenue side, they can always claim that by way of bringing the amendment so far as it relates to the levying the tax on the or the non-allowance of education cess as an expenditure, they are not imposing or levying any additional levy. They are not imposing any additional tax. What they are trying to do is to undo the judicial pronouncements made by some of the high courts. And according to me, it would not yield much revenue to the government, because beyond 3 years they cannot go as per the provisions of section 148, because that would be requiring an escapement of 50 lakhs rupees. And for the last 3 years, there would be hardly any revenue which may be expected. It seems to me that it is an ego issue, because the government realized that they have committed some mistakes in not suitably amending the provisions of section 48, and therefore the assessees have taken the unintended benefit by making a distinction between the taxes, surcharge and the cess. And that unintended benefit which some of the assessees have taken, and particularly after the decision of honorable courts in the case of Sisa Goa and Chambal Fertilizers, the government has just tried to clarify. And one can argue that by doing that, they are simply clarifying the position of the government as regard to the allowance of any particular expenditure, and they are not levying any additional tax. Fortunately, they have also made an amendment in section 14A, which prescribes that whether or not in any particular year there is an exempted income, the provisions of section 14A would have its read with rule 80 would have its application. Fortunately, this amendment has not been made retrospectively and it would be prospective only. Very strangely, we all would appreciate that in section 148, the amendments were made in the last year only. And just within a period of 12 months, the government itself is realizing that there were some drafting errors. In the memorandum explaining the clauses, they have admitted that there was some drafting error. So first of all, one has to examine that that what is the level of the draftsman at the central level, and if by way of making the if just to remove the drafting error, if they are making certain amendments retrospectively, then it is not sorry, then it should not be, it cannot be permitted and it should not be appreciated. In future the government should take every care to draft any provision, because at any point of time an innocent assessee never knows that what is the actual intent of the legislature and whether it is a drafting error or it is the real intent of the government. And he would take the law as it is so written. He would have always give a plain reading to the provisions of the section, and he can not, neither he is supposed to any word nor he is supposed to omit any word from the statute. So he will read the provisions in that manner only, and so if subsequently you come out with an explanation that we committed some drafting error, then it should not be permitted. So by and large, I don't think that by way of amendments they have much imposed any additional tax liability. Yes, but this cess provisions may impact some of the assesses, but there is no additional liability as such. So probably the government would be in a position to defend its case even if this retrospective amendments, if any person makes an attempt to challenge this retrospective amendment. But yes, certainly, I remember that our then Honorable Finance Minister Shri Arun Jaitley Sahab, in the very first speech, had assured the entire nation that this government is not inclined to make the amendments with the retrospective effects. He had specifically spelled out that the era of the retrospective amendment has gone. But now again, as you rightly pointed out, there are 10 to 12 amendments which are intended to make either, but under the garb of the clarification in the nature, they are intended to be made applicable retrospectively, then it cannot be given any sanctity to. This is my personal view. Over to Ibrahim.
Yes, certainly right. Yes, sir. It will certainly resulted in levy of penalty in past cases, because after the amendment, after the judgment of Sesa Goa, some of the assessees started taking the advantage of this provision.
Yeah, but Ibrahim,
Now,
I have my own doubts that even in those cases, if the department chooses to issue the notices under section 148 and subsequently the additions are made on that count, the department would not be in a position to levy any penalty, because there are a number of judgments saying that if relying upon any judicial pronouncement, if an assessee has made certain claim, and even the Reliance Petro would come to the rescue of the assessee. So I have my own reservations that in those cases any penalty would be imposable.
I think a small rejoinder. I agree with the Garg Sahab. It is not going to be the case of penalty, rather. But as far the levy is concerned, again, the normal assessments of 3 years, as Garg Sahab has rightly pointed out, that is going to be taken in that way. And the most of returns has been either filed or revised on the basis of all these judgments. They have to face this corrections accordingly. And as far past reopening, I again concur with the Garg Sahab. It may not be ideal and possible to go back to reopening and exercise in that the previous assessments. But 3 years and onward, it is going to be that. Further to just, it is not the matter of taxation. It is, as Garg Sahab rightly pointed out, it is a matter of ego, and that would have been avoided. And still, I feel if government can consider to drop this amendment from retrospectivity and make it effective from prospective. So I think that can be a valid way of going ahead. I
Certainly.
think.
Certainly.
Yes, Ibrahim, further.
Yes, sir. There are certain other amendments proposed to be effective retrospectively, which will going to impact is the amendment in faceless assessment under section 144B. And thereafter, there is an amendment in explanation 2 of 148 to omit the reference to assessment 3-year assessment preceding the assessment year relevant to the search. Thereafter, the reduction of goodwill from block of assets to be considered as transferred, and thereafter it will again attract the tax. So these all are certain amendments which were.
Ibrahim, since the amendments are effective from April 21, as per the assessment, as per the reassessments, as per the goodwill, I think hardly we are in the 22th. It is going to be affect the retrospective as far the SSC is concerned. I think it is a technically they are going back by 10 months. So what is going to impact on the operational front and legally how we are going to have challenge when we are dealing with the provision of faceless and the reassessment we may deal with. As far the reassessment, we don't foresee any major challenge of this 10-month to affect anybody. But again, the culture should have been avoided. Over to Garg Saab.
Yes, I endorse the views.
Yes. Now we'll further proceed with the provision as to updated return. This amendment came by from an explanation that whether the promoting voluntary tax compliance, such as provision as to revise return, would result in reduction in litigation. We have to analyze it. This amendment was proposed under section 139(8) capital A, in which the assessee can file an updated return within a period of 2 years. So I request Anil Garg sir to kindly throw the light of wisdom, sir.
First of all, according to me, the word which has been used is not correct. Updated return. Updated always contemplated that some original return exists. But in this updated returns, they have contemplated both the situation, whether an SSC has filed the original return or not. So the word which the terminology which they are using is not correct. Then secondly, they are not fair in their approach. They are just trying to extract the more tax if the assessee has shown the income at a lesser side, then only he is eligible. Then the government ought to have been a fair one, and the opportunity and an option should be given to an assessee to update the return correctly, whether he has shown the excess income or the lesser income. If he has shown the excess income, then like the provisions of section 139(5), a window should also have been given to reduce the income. As we all are aware of that, the government is in some manner, the government is rolling back, because I remember the days when the revised return could have been filed within a period of expiry of 1 year from the end of the relevant assessment year. Then they reduce it to that in the very same year you will have to file your revised return under section 139(5). Then now that within same year has again been curtailed to 31st December only. So for the assessment year 22-23, if because of the COVID the dates are not extended, then I'll have to furnish my original return in the case of an individual not liable for the tax audit by 31st July. In the case of a tax audit to assessee by 31st October. In the in the cases of the transfer pricing assesses by 30th November, and I can revise my return only up till 31st December 22. So literally they have not allowed any time. They have made an attempt to make that provision to redundant, and realizing that probably by reducing this time period they may lose some revenue, so they have under the garb that in order to reduce the litigation, they have brought these provisions. And again, this provision is not fair, as I have already spelled out, that they are not giving any window to an assessee to scale down his return income. Number one. Then, so far as these provisions are concerned, one may always think of that why I should file any updated return. Because we all are aware of that if supposingly any person has filed income at any amount and subsequently the income is assessed at a higher income, then the apprehension with the assessee that he may be subjected to a penalty under section 270A. Correct. But again, under section 270AA, an immunity has been granted to an assessee. So supposingly, if it is not a case of misreporting, because under section 270A, two situations has been contemplated. One is of the underreporting of the income and second is the misreporting of the income. If your case falls under the category of the underreporting of the income, then you can simply, and if subsequently either under any assessment proceedings under section 143(3), any income higher than the return income is determined by the assessing officer, then without paying any additional tax, and simply by paying the tax demand which has been determined by the assessing officer, you can get rid of the provisions of section 270. So at every moment, one assessee will have to examine that whether he should go for one updated return or he can wait for some action of making the assessment under section 143(3) by the assessing officer, and subsequently if his case doesn't fall within the ambit of the misreporting of the income, then by getting an immunity under section 270AA, he can always go for that. So every time one assessee will have to make a comparison that which provision is more beneficial to him. Then coming next, in this updated return era, you will not be eligible to show your income at a less by paying a lesser amount of tax. You cannot reduce your tax liability, you cannot increase your refund. But there can be a situation that I have to file one updated return which is not impacting my income at all. If supposingly in my return of income certain particulars which is not impacting my income, but those particulars subsequently I discovered were not correct. For an example, in the return of income, I am required to disclose the details as regard to my holding in the various companies. And after furnishing the return, if I discover that those details were not correct and certain items had escaped, then even earlier, the only option which was available to me was to revise the return under section 139(5). But now I can very well exercise this provision by changing the particulars, although I will not be in a position to reduce my tax liability. And in any case, my tax liability would remain the same. These particulars are not going to change my tax position. So I can file the updated return. This is next. And thirdly, there can be a situation then only my unabsorbed depreciation is getting changed. Supposedly in the case of a company or in the case of any assessee who is carrying out the business, there is in the original return there was a claim of unabsorbed depreciation to the extent of ₹1 crore rupees, and now I want to reduce it to 50 lakhs rupees. Then since my overall tax liability is not getting reduced, because I in that case in the original return I had claimed the carry forward of unabsorbed depreciation to the extent of ₹1 crore, and in the new updated return I am claiming it to the extent of ₹50 lakhs, or vice versa. Even then, since my tax liability is not getting changed, and even there is not, my updated return is not resulting into any return of the loss, because under this new provisions you cannot file any return of the loss. Either you have to file, either you can show the same return or you can file the return showing an additional income. One more thing which I noted, that you can file the updated return even before expiry of the return for filing the revised return. Although no one would do it, but this is the case that one can file the return even prior to 31st December. But in that case, you would not be required to pay any additional charges, as we all are aware of that this updated return benefit is not free. The government is not granting any free lunch now. The government has also become just like a baniya. If you are filing the return within a period of 12 months from the end of the relevant assessment year, then you will have to pay a sum of 25% of the additional tax and interest, and which is filed beyond 12 months but within 24 months, then you will have to pay extra sum of 50%. So but before the date of before the due date for furnishing the revised return under section 139(5), even if mistakenly or otherwise I furnish my updated return, I would not be required to pay any additional tax. This has specifically been mentioned. Then coming to, there are certain restrictions that who cannot file the updated returns. A person in whose case a search has been initiated under section 132, or a person in whose case a requisition has been made under section 132A, or a person in whose case a survey has been conducted under section 133A of the Act, or in a case where a notice has been issued to the effect of any seizure of any valuables or books of accounts from the premises of the others. Here, this can be a very good tool of the planning, because if in your case a search has taken place, then you are debarred from updating your return from the very same day. But if supposedly the search is conducted in your premises, and in your premises some valuables are the cash or jewelry or any books of accounts pertaining to me or belonging to me, in the case of the assets, or in the case of the books of accounts relating to me, are found in your premises, then unless and until any notice under section 148, because we all are aware of that now they have done away with the provisions of section 153A and 153C. So in my case, a notice, if a search is conducted in your case, and if any of the assets belonging to me or the books of accounts relating to me are found in your premises, then invariably a notice under section 148 would come to me. But before coming that notice, if I voluntarily file the updated return, then I can very well file and I can escape myself from the rigor of the penalty and prosecution. So there can be an area of the planning, supposingly a search is conducted in your case, and in your case, supposingly first of all, let me make a disclaimer that any of my opinion or my personal opinion, it should not be taken as the abatement for the tax evasion. Legally, I would like to make it clarify. But supposingly, if a search is conducted in the premises of any person, and if he finds that the cash in his premises, the cash amounting to rupees 50 lakhs is found, and he says that no, this case doesn't pertain to me, it pertains to Ibrahim. And if Ibrahim files the return, and Ibrahim filed the return before issuance of any notice under section 148, and Ibrahim is in a position to give some evidence that where from this 50 lakhs had come and under what circumstances he kept this cash with me, then probably we can get rid of the provisions of penalty and provisions which would otherwise have been for which one would have otherwise been liable if the notice subsequently under section 148 would have been issued. So this is a very good clause, because this provision does not say that moment a search is conducted in the premises of A, B would also be precluded to file his updated return. For B, the time available is the time till when the notice under section 148 is issued to him. Then updated returns cannot be updated. Previously, we used to revise the returns 1, 2, 3, revised returns are again revised. Now the updated returns, one file cannot be revised, cannot be updated. And one more thing, one can take the benefit of these updated returns that will come later on the provisions of section 148 and 148A. In the 148A, as we all are aware of, that the assessing officer is duty bound to issue a show cause notice if he finds that there is any escapement. And after getting our reply, then he can take a call that whether to go for the issuance of any notice under section 148 or not. And only after taking a call, a notice under section 148 shall be issued subsequently. So according to me, the proceedings would be pending from the date on which the notice under section 148 is issued. Before that, so that in the case of an assessee, if we receive any notice under section 148A, then and there, if you can recall or you can recollect that some mistake has got crept in your original return or the return already furnished under section 139(5), then certainly one should opt for these provisions of updating the returns, because the moment because at that time, at the time of receiving the notices under section 148A, you would very well within your power to furnish a return. So that benefit should be taken. And again, there are certain prohibitions that in respect of a person in whose case any information under DTAA has been received, or any prosecution has been launched, or further that the government has also prescribed that there can be a class of the person or some person in whose case this filing of the updated returns would not be permissible. And then now on the TV channels and other channels, I have heard that you are mandatorily required to pay the additional tax and interest while filing the return, updated return. It is not the case. The only consequence would be that if you furnish an updated return determining some additional tax and interest liability, along with the additional tax of 25% or 50%, whatever it may be, you need not to pay. If you are short of funds, you need not to pay it. You simply file your return, updated return, without paying the tax, and subsequent, but that return would be regarded as a defective return in accordance with the provisions of subsection 9 of section 139. And whenever it comes to the notice of the assessing officer, or in the today's area by the CPC, they would be issuing you a notice. And after receiving the notice, you'll have to remove that defect within a period of 15 days. So till then, you can wait and you can manage your funds. And thereafter, within 15 days, you will have to rectify that defect by way of paying the tax. And your updated return will be treated as a valid return. So mainly for the reason that you don't have sufficient fund at a particular point of time, if the updated return is necessitated, then certainly you should file that return. This is all about from my side, so far as this updated returns are concerned.
Thanks, Garg Sahab. I think Garg Sahab has nicely made the threadbare analysis, and which just small some rejoinder from my side. Otherwise, the Garg Sahab has made everything. I think the wording and spirit and wording of the section is not going in consonance. This is my observation. One way you are trying to say it is a reduction of litigation. Again, you are putting so many exclusions and so many things. You may increase your tariff rate of penal taxes or additional taxes, whatever we say, from 25, 50% to over and above. You can make the various classes, but making so many exclusions may not be able to serve the purpose. As Garg Sahab rightly pointed out, one may go to examine the other options. If really you are having intention to give the leverage and give additional time the persons who has missed something to file it, so I think number of exclusion are going to make this section redundant. Another, certainly the number other legal issues may be also emerging as far as exclusions are complete. You are saying in case of assessment either completed or pending, you are not eligible. As a person, I'm not able to, a person of law, a law student, I'm not able to understand the moment I have filed my return. If I have not filed my return, certainly my and assessment is not completed and my not pending, that is okay. But if I filed my return under 139(1) or any other section, so certainly I'm, as a pure literal reading, I'm going to take it. It is going to be the pendency. The moment I filed my return, my case is pending for assessment. Although we are having we may come with the harmonious reading, like Garg Sahab has suggested rightly, ki pendency may start and trigger with the issuance of notice of 143(2), not prior to that. 143(1) intimation is just intimation. But I think that is going to create more. I think law would have been much simpler and straightforward as required. And again, the Garg Sahab has given very variable planning inputs. I'm scared Garg Sahab should have suggested this after the Finance Act come into the existence. Otherwise those corrections we are having risks to see in the Finance Act itself. Thank you. Over to Ibrahim.
Thank
I
you,
would
sir.
also add some few things that in case if in your case a survey takes place supposedly on 1st of August 2022, then in that case, not only for that particular year, and even for the 2 prior years, you would be precluded to file the updated returns. So the moment any survey operations takes place in your premises, then you cannot file your updated return even for the assessment year 2021. This is the situation. The next, and one more question arises, that what would be the situation of the penalty under section 270A? According to me, the penalty provisions of section 270A are required to be examined for the updated return, and it cannot be examined for the original return, because as we all are aware of, there are two sections. One talk about the misreporting and underreporting. Underreporting income ke liye the computation mechanism is to compute the difference between the income shown in the income determined under section 143(1)(a) and finally assessed. So all these things should be taken care of, taking into consideration the updated return. This is my submission.
Yes, so I think I'm agree with the Garg Sahab view. Just a small rejoinder. I think the era of penalty, litigations penalty is the prone to be that, since we were having number of litigation in the past in respect of revised return or belated return, whether this updated return is going to be treated as original return updated, or if it is going to be treated as something new. Since the consequential amendment has not been introduced under the penalty provisions 270A, so I think it's required to have to avoid the unnecessary penalty. Appropriate amendments in the penal provisions are also warranted. Yes, over to Ibrahim.
Thank you, sir, for your valuable comments. Now we'll proceed further with the assessment and reassessment provision. Then first thing which everybody was thinking about, that what would be the future, what would be the proposed amendment for the last year amendment, which which opened the floodgate of litigation for the reassessment notices. And there was one thing is that there is no saving or revival clause has been brought in this amendment. The issue continues to be litigated in respect of notices issued after 31st March 2021 under the old reassessment regime. The most High Court have given favorable verdict in the favor of assessee. However, the thing which we have to see is the pending case which has been challenged by the UP government, Allahabad High Court judgment. The Supreme Court will decide it and give the final verdict. Uh, will there be saving or revival clause? Thereafter, one thing is that there is by this proposal by amendment, the government has expanded the scope of reassessment. The existing provision has ramped the reassessment proceeding by Finance Act 2021. There is certain amendment proposed, such as that they have enlarged the scope of information. Thereafter, there is certain other provisions which have diluted the procedure, like insertion of the provision to section 148 and omit the clause. Thereafter, there is certain other omission reference of section 133A, clause 5, and thereafter they have also omitted the 3-year provision in explanation 2 of section 148. With this all amendment, I request Anil Garg sir to kindly share your valuable knowledge, sir, on these amendments.
Thank you, Ibrahim. Through these amendments, they have expanded the scope of invocation of the provisions of section 148. As per the existing provisions, first of all, they could have invoked the provisions of section 148 only in 2 situations: when they were in possession of any information which has been flagged according to the risk management strategy formulated by the board, number 1. And secondly, in respect of the final audit objection accepted by the revenue. Only in these 2 situations, they could have invoked the provisions of section 148. Now they have enlarged the scope. Now they have omitted the word flag, any information. Then it is not only the audit by the C&AG, it is even the very ordinary audit, internal audit, revenue audit, by whatever name it is called. If there is any slightest audit objection, they can very well invoke the provisions of section 148. Then any information which is received under section 90 and 90A, we all are aware of that under the provisions of subsection 3 of section 90, there is a section that the governments of 2 countries can enter into an agreement for sharing the information. And if any information is issued by the Indian government from any country, then based upon those information also the provisions of section 148 can be invoked. Then there, if any information is received under section 135A, or lastly, any information which requires action in consequence of the order. And it is the information, not even the direction. Normally, there are the provisions in the act which says that if the during the course of any appeal, if the honorable tribunal finds that any income of an assessee pertains not to that year, but it pertains to some other year, then the honorable ITIT is well within its power to direct that this income should not be assessed in this year, but it should be assessed in that particular year. But in that case also a specific direction has to be given. But here what they are talking about, that any information. So according to me, this amendment can be misused or abused by the assessing officer, because it simply talks about any information which requires action in consequence of the order, whether or not the honorable tribunal or any court has given any specific direction to that effect. So these are the amendments, and they have made the amendments under section 148A and section 149. So first I would be taking section 149. because under section 149 we all are aware of that. As per the existing provisions, any notice under section 148 can be issued only for the 3 years, and if the uh, amount of escapement of income is above rupees 50 lakhs and that is represented in the form of assets, then they can go to the extent of rupees 50 lakhs, and then they can go to the extent of 10 years. And again, in the section itself, there was again a rider on the power of the assessing officer, that they could not have that they cannot issue the notice if they were not well within their power to issue that notice before making the amendment by the Finance Act 2021. Say if supposingly up till before making the amendment by the Finance Act 21, they could have issued any notice under section 148 for a period of maximum for a period of 6 years. And in the case of the provisions of section 153A, the normal period was of 6 years. And if there was any escapement of income again exceeding rupees 50 lakhs, then they could have gone to the to invoke the provisions under section 153A for 10 years. But again, that escapement was required to be represented by the assets. So in the section itself, an provision was given that the although the powers for reopening was given for for 10 assessment years, but by virtue of that provision, the assessing officer could not have issued any notice for more than 7 years. The assessing officer could not have issued the notice under section 148 for assessment year 12, 13, 13, 14 or 11, 12, 12, 13 or 13, 14. Because of the only restriction which was imposed, and that restriction was that any notice for the benefit of all, it would be apt to read that provisions. Section 149, it's very important. Earlier, what was the position and how they are going to change it? The pre-proposed amendment, the section reads like, no notice under section 148 shall be issued for the relevant assessment year if 3 years have elapsed from the end of the relevant assessment year, unless the case falls under clause B. Plain provisions, 3 years one can do. Then second, if 3 years but not more than 10 years have elapsed from the end of the relevant assessment year, unless the assessing officer has in his possession books of account or other documents or evidence which reveal that the income chargeable to tax represented in the form of asset which has escaped assessment amounts to or is likely to amount to 50 lakh rupees or more for that year. So again, what lady spelled out for more going beyond more than 3 years, there should have been there is a requirement of escapement of income to the extent of 50 lakhs represented in the form of asset. This is the existing position. Now one proviso is very important. Provided that no notice under section 148 shall be issued at any time in the case for the relevant assessment year beginning or on or before first day of April 2021, if such notice could not have been issued at that time on account of being beyond the time limit specified under the provisions of clause B of subsection 1 of this section, as they stood immediately before the commencement of the Finance Act 21. तो इसका इफेक्ट ये हो रहा था कि लिटरली तो 10 साल की उन्होंने लिमिट दे दी थी, किंतु उन्होंने ये कहा था कि अगर आप फाइनेंशियल ईयर 20-21 में जिन सालों का नोटिस नहीं दे सकते हो, उनके नोटिस अब आप अभी भी नहीं दे सकते. ये इसका इफेक्ट था. किंतु उन्होंने एक वर्ड, छोटे से वर्ड को, सच नोटिस वर्ड को इन्होंने अनोटिस, सच की जगह सिर्फ अ वर्ड का, एक वर्ड का उन्होंने अमेंडमेंट करा है. उससे उन्होंने अपना स्कोप बढ़ा लिया. दूसरा, इसमें जो अभी मैंने आपको जो प्रोविजन पढ़ के सुनाया, उस प्रोविजन में देयर वाज अ रेफरेंस ऑफ ओनली अंडर सेक्शन 148 कि अगर 31 मार्च 2021 के पहले आप सेक्शन 148 में नोटिस नहीं दे सकते थे, तो आप 31 मार्च 2021 के बाद में भी उस नोटिस को नहीं दे सकते हैं। किंतु वो पहले से बात कर रहे थे सेक्शन 148 की, अब इसमें बात कर रहे हैं, अभी जो अमेंडमेंट आया है उसमें बात कर रहे हैं कि 148 की तो बात कर ही रहे हैं, वो 153 ए की भी बात कर रहे हैं और 153 सी की भी बात कर रहे हैं। अब इसका इफेक्ट ये हो गया है कि 148 की जो टाइम लिमिट अवेलेबल थी 6 साल की, वो तो हो ही गई। उसके साथ साथ में जो 153 ए की जो 10 साल वाली लिमिट थी, वो लिमिट भी अप्रोप्रिएट केसेस में अब असेसिंग ऑफिसर को अवेलेबल हो जाएगी इस अमेंडमेंट के साथ में, और ये रेट्रोस्पेक्टिव इसको इस अमेंडमेंट को लाया है। मतलब अगर किसी व्यक्ति को जुलाई 2021 में कोई नोटिस दिया है, असेसिंग ऑफिसर ने 8 साल पहले का भी अगर नोटिस दे दिया है गलती से भी, तो अब इस रेट्रोस्पेक्टिव अमेंडमेंट के माध्यम से वो वैलिडेट, वो रिटर्न हो जाएगा। तो दिस आर द टू मेजर चेंजेस विच दे हैव ब्रॉट इन। एक असेट्स की बदले में उन्होंने ये बोल दिया है कि अब असेट्स जरूरी नहीं है। मेरे कुछ केसेस में ऐसा सामने आ रहा था कि मेरे एक असेसी ने 4 साल पहले 5 साल पहले उसका सर्च हुई है, 5 साल पहले के केस में कुछ उसके एक्सपेंडिचर ऐसे थे जो कि अकॉर्डिंग टू द असेसिंग ऑफिसर या इन्वेस्टिगेशन विंग के लिए अलाउेबल एक्सपेंडिचर नहीं थे, या इन्वेस्टिगेशन विंग का कहीं ऐसा व्यू था कि मैंने लोन बोरोइंग करी और कंसेशनल रेट पे मैंने मेरी सिस्टर कंसर्न्स को इसको पास थ्रू कर दिया है, और इस तरीके से कहीं ना कहीं मैंने प्रॉफिट डाइवर्ट करा। तो जो अभी एग्जिस्टिंग प्रोविजंस थे, उस प्रोविजंस के अंतर्गत तो मैं उसमें नहीं आ रहा था, क्योंकि इससे मेरी अल्दो 3 साल के बियॉन्ड पीरियड था, कंसीलमेंट ऑफ इनकम भी हो सकता 50 लाख रुपए से ऊपर हो, बट दैट वाज नॉट रिप्रेजेंटेड बाय वे ऑफ एनी एसेट। अब उसको उन्होंने चेंज कर दिया। they have brought the they have broadened the scope. Now they have also covered the cases in which the escapement is represented by any expenditure or any entry in the books of accounts. One view is that ki entry in the books of accounts is not the regular is not the entries found in the regular books of accounts. It should be the entries which have been found in the incriminating documents. So it would be again a matter of litigation. तो इस तरीके से अब उन्होंने 10 साल का उस पर कर दिया। बट अगेन अभी हम आज की डेट में भी अगर इसको एग्जामिन करें, तो मैंने इसको एक एनालाइज करा था कि पहले की जो सिचुएशन थी, जो 148 की जो सिचुएशन थी, उसमें वो अल्दो 10 इयर्स का था, एक केस मान लें कि 50 लाख रुपए से ऊपर का भी एस्केपमेंट था, तो भी वो असेसमेंट या 15-16 के बियॉन्ड नहीं आ सकते थे, क्योंकि असेसमेंट या 15-16 से अपन उसको 6 साल जोड़ते थे, 31 March 22 तक they could have issued the notices only for 6+1 मतलब total 7 years. अब जो प्रोविजंस, अब इन्होंने जो अमेंडमेंट 10 इयर्स का अगर उसमें कर दिया है, तो ये अब जा सकते हैं असेसमेंट ईयर 12-13 तक जा सकते हैं 10 इयर्स में। किंतु अगेन असेसमेंट ईयर 12-13 तक जाने में वो जो प्रोविजो मैंने आपको अभी पढ़ के सुनाया है सेक्शन 148 का, वो प्रोविजो में सिर्फ एक वर्ड को उन्होंने चेंज किया, दे नॉट चेंज द एंटायर प्रोविजो। तो अब उसका मीनिंग ये हुआ कि आज की डेट में बियॉन्ड 3 इयर्स जाने के लिए, और उसमें भी बियॉन्ड 15-16 जाने के लिए, अगर उनको असेसमेंट ईयर 14-15, 13-14 या 12-13 में जा रहे हैं, तो उनको देखना पड़ेगा कि सेक्शन 153 ए के अंतर्गत भी पुराने प्रोविजंस में जा सकते थे कि नहीं जा सकते थे। तो 31 मार्च 2021 के पहले भी वो असेसमेंट ईयर 12-13 के लिए प्रोविजंस ऑफ सेक्शन 153 could have been invoked only in a case where any escapement was represented by way of the assets, क्योंकि सेक्शन 153 ए की ओरिजिनल लिमिट जो थी, इट वाज फॉर द 6 इयर्स. माय लर्नड फ्रेंड वुड वाउच इट दैट सब्सिक्वेंटली दिस लिमिट वाज रेज्ड फ्रॉम 6 इयर्स टू 10 इयर्स with a rider that the for this 4 years the escapement should be represented by the assets. तो अगर अब आज की अगर पोजीशन में अगर हम देखते हैं, तो 10 साल के लिए वो जा सकते हैं असेसमेंट ईयर 12-13 से असेसमेंट ईयर 21-22 तक, बट बियॉन्ड 15 असेसमेंट ईयर 15-16 तक वो जा सकते हैं सेक्शन 148 को उनको राइट्स थे. सेक्शन 3 साल जो 12-13, 13-14 और 15-14, 13-14 और 14-15 के लिए अगर उनको ओल्ड प्रोविजन सेक्शन 153A का अगर शेल्टर लेना है, तो उस वक्त की जो कंडीशन थी 153A की, वो असेट्स वाली कंडीशन पे उनको जाना पड़ेगा। अगर वो 12, 13, 13, 14 या 14, 15 का, जैसे 14, 15 में मेरी कोई अनअकाउंटेड, मैंने कोई एंट्री ले रखी है, मान लो अगर असेसिंग ऑफिसर का कि मैंने कोई कोलकाता बेस्ड कंपनी से कोई एंट्री ले रखी है, या मैंने कोई भी अनसिक्योर्ड लोन सेक्शन 68 के या कुछ भी मैं उसको सब्सटेंशिएट नहीं कर पा रहा हूँ, तो भी अब ये अमेंडेड प्रोविजंस में भी वो सेक्शन 148 को इन्वोक नहीं कर सकता। इट हैज टू बी नोटेड वेरी कॉशियसली दैट हमको सेक्शन 149 बहुत इंपॉर्टेंट हो गया, इसमें टाइम लिमिट बहुत इंपॉर्टेंट होगी। और टाइम लिमिट में उसमें जो सेक्शन 149 का जो प्रोविजो है, जिसमें उन्होंने 6 ईयर्स 10 ईयर्स और साथ साथ में ये राइडर डाल रखा है कि अगर आप 1 अप्रैल 2021 के पहले जिन सालों का नोटिस दे सकते थे, नहीं दे सकते थे, उनको आज भी नहीं दे सकते। ये सारी चीजें काफी इंपॉर्टेंट हो गई है, तो इट हैज टू बी नोटेड वेरी कॉशियसली। I think that I have covered all the issues relating to changes under section 148.
I think again, Garg Saab has nicely covered elucidated the detailed provision. Just a small rejoinder I want to make. I think with the paucity of time, the amendment of 148, the new era of the codified law of reassessment introduced by the Finance Act 2021, I as a tax lawyer taken is very positively. I have taken is the law which is codified by the Supreme Court in GK and DriveSoft. I have taken it is in the much better way, is put into the statute, and it is going to reduce the litigation and the fair opportunity, even the number of approvals, inbuilt mechanism and everything, in which cases they can go beyond 3 years and all this. So I was very optimistic and very positive in that way. But unfortunately, with the sort of these amendments, which I feel it is going to create the new Pandora, and again we are going back to the lot of other unwarranted litigations in the matter. Since again the making this 50 lakhs limit, which we have generally taken for 1 year, we have taken represented in the form of assets. Now expanding it to expenses, these, that, and even the entries, as Garg Saab has pointed out rightly. But it is going to create a new era of, again, the informations, they made the too wide. When this original provision came, flagged up with the risk management strategy of the board. Almost 1 year is passed. I was just searching what sort of risk management strategy board will frame, which will come into the picture. Although we were fighting for number of notices issued post April 2021 under the writ remedy, and for the quashing the notices we were fighting with and we have got the interim orders by Honorable High Court in the very first hearing in the number of matters. But I was more waiting for what the risk management strategy will be fact of. So I think the board has internally decided it is we are carrying the bigger risk if I am going to frame any risk management strategy. That's why they have made the pure information based, and they have expanded the scope. One and all can be included in anything, even the dilution in respect of the provisions in certain cases of the prior approval, and even the faceless informations collected in the faceless assessment system, those would be excluded from the making compliance of 148. I think this sort of provisions, I'm very scared is going to create very hardship to the SSCs and going to make the very huge and enormous impact as per the assessment and reassessment proceedings in the due course. Over to Ibrahim.
Yes, sir. Now we'll proceed further with the amendment of which has been made under section.
Ibrahim, we are having the paucity of time. We have to move little fast.
Ibrahim, before
Yes,
that, there is very important amendment, section 133A. I would like to throw some light on those provisions. Section 133A, although they have made a very small amendment, they have changed. We all are aware of that earlier. The judicial assessing officer used to conduct the survey, and by way of making an amendment in 2020, they have restricted these powers to only to the investigation wing, and therefore only the officers subordinate to the principal director general of investigation or the principal director general were given the power. Now again they have given the power to the officer subordinate to the principal chief commissioner and commissioners. And therefore this now we'll see in time to come that the number of surveys are bound to be increased in time to come. There are two, three small things which are associated with it. That one is the an amendment in the an introduction of section 79A, which talks about that if during the course of the survey any additional income is found, then no loss set off of loss shall be permissible against that income. This section 133A has to first will have to take in account the provisions of section 115 BBE, which is a very draconian provisions which imposes the rigor of tax of 60% with 25% surcharge and 4% education cess, coupled with a penalty of 10% on the tax. So roughly working around 83-84%. अब इसमें now they have restricted कि अब if in a now there is two things, that if during the course of the survey any income which is found and which is in the nature of the section 68 or section 69 to 69D, then the income shall be chargeable to tax at the special rate under section 115 BBE. Those provisions were already there. As it was not sufficient for the legislature, they have brought in this new section 79. It restricts that agar aapka, if there is any survey and if during the course of the survey any undisclosed income is found, then against that undisclosed income you cannot claim any set off of loss, whether it is brought forward or it is of the same year. सपोजिंगली आपके यहाँ पर सर्वे होता है एंड डिस्क्लोज इनकम 50 लाख रुपए की मिलती है और आपके पास ब्रॉड फॉरवर्ड कोई भी अगर लॉसेस हैं या उसी साल का कोई दूसरा हेड का लॉस है तो उसको आप एडजस्ट नहीं कर सकते हो या इसको वो करता है. बट वेरी इंटरेस्टिंगली दिस रेस्ट्रिक्शन टॉक्स अबाउट ओनली द सेट ऑफ लॉस, डिडक्शन की बात नहीं करता. अगर मान लीजिएगा मेरी इनकम सेक्शन 80IA या 80IB में एलिजिबल फॉर डिडक्शन है, then even in respect of this undisclosed income, surrender are admitted or assessed by the assessing officer, I will be eligible for the deduction, which is the case. एक बड़ी इंपॉर्टेंट बात जो मैं यहाँ पे इस मंच से बोलना चाहूंगा वो ये है कि आज की डेट में जिस तरह के प्रोविजंस आ रहे हैं उससे बुक्स ऑफ अकाउंट्स रखना एक मिडिल क्लास बिजनेसमैन के लिए, जिसके लिए की कंपनी नहीं है जिसकी, उसके लिए ज्यादा खतरनाक है बुक्स रखने से. मतलब बुक्स रखना ज्यादा खतरनाक है बुक्स नहीं रखने से. हमारे इसमें सारे की सारे जो भी प्रोविजंस आ रहे हैं ना, जो सेक्शन 271 AD की पेनल्टी आज से 4 साल पहले आई थी वो भी उन्हीं लोगों पे एप्लीकेबल होती है जो बुक्स ऑफ अकाउंट्स रखते हैं. वो सेक्शन बोलता है कि अगर आपकी बुक्स में कोई भी फॉल्स एंट्री मिलती है, ओमिशन ऑफ एंट्री मिलती है, तो हम इक्वल अमाउंट की पेनल्टी लगा देंगे. फिर अगेन अभी सेक्शन 79A में अनडिस्क्लोज इनकम की बात करते हैं और अनडिस्क्लोज इनकम की जब अपन उसमें डेफिनेशन देखते हैं तो अनडिस्क्लोज इनकम की डेफिनेशन में एक तो अनडिस्क्लोज एसेट्स आ गई, वहां तक तो ठीक है कि अनडिस्क्लोज एसेट्स मिली है, और उसके बाद में और दूसरे उसको फर्दर देखते हैं कि एनी इनकम और एक्सपेंडिचर एंटर्ड इन द बुक्स ऑफ अकाउंट्स. तो मैंने मेरी बुक्स में एंट्री करी है उससे आपको मिलती है, तो बुक्स ऑफ अकाउंट्स को मेरे को रखना चाहिए या ना रखना चाहिए, ये क्वेश्चन. अब अगर हम एक्ट की बात करें कि मुझे बुक्स ऑफ अकाउंट्स क्यों रखना चाहिए, तो देर इज ओनली two provisions under the entire income tax act, which 2 or 3 provisions. One is under section 44AA, which mandates every SSC fulfilling certain conditions to maintain the books of accounts. फिर ये बुक्स ऑफ अकाउंट्स अगर मैंने मेंटेन नहीं करी तो एट द वर्स्ट मेरे में 25,000 रुपीज की पेनल्टी सेक्शन 271A में लगेगी. और तीसरी बात बोलता है सेक्शन 145 सबसेक्शन 1, वो ये बोलता है कि any person who is carrying out the income, who is deriving the income from business or income from other sources, his income will be computed in accordance with the books of accounts maintained by him. और अगर आपने बुक्स रखी है तो बुक्स को 145(3) में रिजेक्ट करेगा। अब मैं इस पॉइंट पे आता हूँ कि पहली बार अगर मेरे यहाँ पे सर्वे होता है तो सर्वे में बुक्स ऑफ अकाउंट्स रखने की हमको रिक्वायरमेंट को बहुत अब कॉशियसली समझना चाहिए कि बुक्स ऑफ अकाउंट्स के लिए जो रिलीवेंट रूल्स है वो रूल 6F है। रूल 6F बोलता है कि आपको बुक्स ऑफ अकाउंट 7 साल के रखना है। अब आपको 148 के पावर्स 10 साल के दे रखे हैं, किंतु उन्होंने अभी तक उसमें सेक्शन में कोई चेंज नहीं करा है या रूल में कोई चेंज नहीं करा है कि आपको 10 साल की किताब रखना है। तो आप अगर आप 10 साल की किताबें आप रखते क्यों? क्योंकि आपने 10 साल पुरानी अगर किताब रखी तो उनको 10 साल के पावर मिल जाएंगे। तो पहली बात, जब एक्ट की रिक्वायरमेंट ही नहीं है 7 साल से ज्यादा पुरानी किताबें रखने की, तो आपको 7 साल से ज्यादा पुरानी किताबें रखना ही नहीं चाहिए, नंबर 1। नंबर 2, बुक्स ऑफ अकाउंट्स कहाँ रखना चाहिए? अगर बुक्स ऑफ प्लेस ऑफ कीपिंग द बुक्स ऑफ अकाउंट्स को भी हमको बहुत माइन्यूटली एग्जामिन करना चाहिए। इट हैज टू बी, आपको करंट ईयर की जो बुक्स ऑफ अकाउंट्स है ना, इट हैज टू बी केप्ट एट द प्लेस और प्रिंसिपल प्लेस वेयर फ्रॉम यू आर कैरिंग आउट द बिजनेस। पुराने सालों की बुक्स ऑफ अकाउंट्स कहाँ रखना चाहिए इसके बारे में कोई नहीं बोल सकता। अगर किसी एसएससी को बेचारे के पास में अगर वो डिमनेशिया और वो भूल जाता है कि मेरी बुक्स ऑफ अकाउंट पुरानी कहाँ रखी, उसको याद नहीं आया, तो वो उससे बच सकता है कि जब पुरानी किताबें कहाँ रखी हुई है, और वो भूल सकता है। सिर्फ उसी साल की वो किताबें रख के भी अपना काम चला सकता है। मतलब कई लोगों को वो आमिर खान की कौन सी पिक्चर थी, गजनी, हाँ गजनी, वो गजनी भी बन सकता है कि सब पुरानी साल। गलत स्टेटमेंट मत बोल, तो बंधु आप कहीं दूसरी जगह भी स्पेल आउट मत करो, क्योंकि दूसरी जगह आपने स्पेल आउट करी तो वो प्लेस बिजनेस की बन जाएगी और वहां पे भी इनकम टैक्स का सर्वे हो सकता है। किंतु पुरानी बुक्स के बारे में अगर आपको कोई भी जानकारी नहीं है, क्योंकि इसके लिए जहां पर भी इस पे सेक्शन है, द असेसिंग ऑफिसर मस्ट बी इन पोजीशन ऑफ हिज बुक्स ऑफ अकाउंट्स और डॉक्यूमेंट। अब उसके पास में पोजीशन में नहीं होगी तो सारा का सारा झगड़ा ही खत्म हो जाएगा। तो बुक्स ऑफ अकाउंट्स में 133A में, इसके बाद में 133A में एक बात की और ध्यान रखें सभी लोग जो प्रैक्टिस करते हैं, कि हर इनकम जो होती है वो सेक्शन 1.5BE में चार्जेबल नहीं होती है। कुछ इनकम, जैसे सपोजिंगली मेरे केस में, मेरा एक रियल एस्टेट का केस है, अगर मेरे यहाँ पे असेसिंग ऑफिसर अगर सर्वे होता है एंड इफ आई हैव बीन फाउंड टू हैव कलेक्टेड certain on money from the customers, then those on money would not become any income in the nature of section 68 or section 69 to section 69D, और उसमें 115BE के हाई रेट से मैं देने के लिए लायबल नहीं हूँ। और अगर मेरे पास में, अगर मैंने ऑन मनी ली और ऑन मनी के सामने एक्सपेंडिचर भी करा, तो दोनों का मेरे को सेट ऑफ मिलेगा और वो मेरी नॉर्मल बिजनेस इनकम के रूप में असेस होगी। तो जब भी कोई भी व्यक्ति अगर सर्वे के केसेस को डील करता है तो उसमें ध्यान रखे कि हमें हर इनकम को सेक्शन 115BE की इनकम नहीं मानना चाहिए। These were some inputs from my side so far as provisions of section 133A are concerned. Thank you.
Great. I think Garg Saab has nicely covered and given some valuable input. Just some small rejoinder to that, further to go ahead. Basically, as Garg Saab has pointed out, this survey in the digital era, now we are having faceless assessments. Survey cases are going to be the very normal and routine. It is going to be increased certainly. Since the search provisions, they have to do certain methodology, and search provisions are is going to have its own procedures and formalities under the law. I think survey enormous, even the increasing the scope and all these officers and all this is the one part, and they don't require any. But at the same time, the introduction of section 79A in respect of the setup of losses in respect of the income found under the survey and all these. But my question is that in that way, whether, I think really Garg Saab has rightly pointed out whether this expenses which was not accounted for on the date of the way my books are open, survey has taken place on that day, I'm supposed to complete when I'm supposed to complete the books of accounts. I can complete in due course also. If you are coming on particular day and some entries are not introduced, losses are one part. Even the expenses, they will be treated by expenses. I'm supposed to enter it. So, the moment my books are closed and audited and I've signed and filed my return, till date I'm supposed to make my entries. how you can say it is found on the date of survey and that's why it is unexplained, that's why it is going to be the trigger higher taxation, this, that. I think there is one part, again, the losses and expenses, certainly the Garak Sahab has pointed out, is going to take the new loss. When I will come to loss, when I will make all the income minus expenses, then it is going to be the profit and loss, not before that. All the expenses are supposed to be taken over before arriving any losses, and my expenses are supposed to be considered according to me. This is one part. This is, I think, certainly is going to create the new complications and enormous complications as far the survey cases are concerned in day to day. But as far the maintenance of books of accounts, to some extent, I'm okay if it is for the tax planning, you can say you are not having any books and all these. But my question is that you are not maintaining the books for income tax purpose only. The moment you maintain proper noting and books, even professionals like us, if we will not maintain, how I will collect my charges? How will I maintain my? So I think for any businessman, any prudent businessman, any prudent organization is supposed to maintain, whether it is mandatory under the law or not. But if he is maintaining, then he is caught under the provisions. This is what is the spirit of law and how we are going to take. I think maintenance of books of account should not be an obligation on the SSE. He should have got some positive merits. Here, if I am maintaining, rather the law is prescribing for 7 years, I am keeping 10 years. If I am keeping some better records and better books of accounts, I am going to caught in the bigger dilemma. This is I think the law is not in the proper spirit, which I feel. Yes. Over to Ibrahim.
Thank you, sir. After search and seizure amendments, we'll further proceed with the amendment relating to faceless assessment. We see that the central government introduced the faceless assessment scheme to provide the greater transparency and efficiency and accountability in the income tax assessment. All provision introduced under the faceless assessment scheme was for the elimination of interference between the assessing officer and the assessee during the course of proceeding to the extent technology feasible. This was the view of the government while introducing this faceless thing. Thereafter, however, during the course of last 1 year, we have found that there has been certain challenges that has been faced by department as well as by the assessee, such as the information technology glitches. Thereafter, the order passed before the last provide for it does not give the opportunity of being heard sometime, because previously the opportunity of being heard was at a discretion of the assessing officer and it was not mandatory. And certain other challenges which has been faced by department and assessee are that the inability of AO to refer the matter for special audit and lack of training and infrastructure by the department. So thereafter they have proposed certain amendments to get rid of such type of thing. I request sir to kindly throw some knowledge. Vendru sir.
Yes, I think this faceless era is we appreciate the concern of the government and it has taken in the right shape, and with the spirit and with the technology, I think we have to admire and go it. But the certain things was not addressed, which judiciary has intervened, including the principle of natural justice on account of opportunity of being heard. Whether it is the mentioned in the law or not, it is the well-settled law over the centuries by the apex court and all these. You cannot, this is the basic right of anything unless it is given. Whether the opportunity of the moot question was before the court, whether the opportunity of being heard, if I issued the notice, or even oral hearing of the person is mandatory. That was the law. But to some extent, even the judiciary came it is the oral hearing is mandatory. But now still the certain questions are still open. I am being heard by X official. an order is passed by Y, how my, if I am given the my oral hearing to Anil Garg Sahab and the order is ultimately issued by Ibrahim sitting at his place, how the law is going to take place? I think the person who has the passed the order, he's supposed to have, unless the proper recording is there, and my entire recording is share to Mr. Ibrahim when he's passing the order. I think there is a lot of issues still are going to be create the serious legal challenge in respect of the faceless orders, which is we are expecting to come. We have started the assessment orders. Now we are going to faceless appeals. This is the one thing which I feel it is going to take. Again, in respect of amendments, I think what it is proposed in the law, this is, they have made certain they have changed the entire section again. Why? I think certain things there are relevant improvements, certain are irrelevant. I feel I would request Garg Sahab to throw some specific light and enlighten the provisions. Since I'm having expert in this subject with me.
Thank you, Dosa. I'm really surprised by these amendments because initially this scheme was brought in by way of a notification, and in the last year itself, by way of insertion of section 144B, this scheme in detail had been brought in, and now they have made the amendments. And to be very honest, this scheme is again running into 5-7 pages, and it is a very Herculean task to first go through this scheme and to make a comparison between this new scheme and the old scheme. That what because by giving a plain reading, cannot find any substantial changes. The only change which I can notice that now there would not be any requirement to issue any final show cause notice. And probably one more thing they have addressed, that earlier the process was that the assessment would be the notices would be issued by the NFFC, then the assessing officer would be calling for the information, then there would be a review unit, and again the assessment after making the your submission, the assessment can be passed by a third officer. Now they have prescribed that it would be passed by the first assessing officer only. And probably through that they are trying to address the concern shown by my learned friend, that the person who has given the personal hearing, probably that would be the person who would be the passing the assessment order. This is what I can comment upon this new scheme. And again, to me, by my practical experience, says that that first of all, according to me, if the government thinks that this scheme is a benevolent scheme for an assessee to make the system more transparent, to prevent the assessees from various hassles, then the option should be given to the assessee himself, whether it is while file it is whether it is in respect of the faceless assessment or faceless appeal. Because even I would start with the faceless appeal. If supposingly I'm filing my appeal against any order, then at the time of filing the form number 35 itself, I should be given an opportunity to option the exercise, that whether I want to be heard manually or I want to be heard faceless. So it should be the option of the assessee and not of the department. Because if some assessee feels that he would be in a better position to represent before the appellate authorities, to present his own case without engaging any lawyer or a chartered accountant, in his own language, by going personally along with his all books of accounts and records, then the government should not take away this valuable right of the assessee, the subject, who is going to be affected by the order of the assessing officer. So according to me, while filing any return, while filing any appeal, the assessee should be given, the appellant should be given a right, and mutius mutandi, a right should be given to the assessee while filing any return of income, that in case your case is selected for the scrutiny, what would be your choice, whether you want to go for the faceless assessment or you want to go for the manual assessment as was prevailing in the earlier era. I don't know that whether my this suggestion would be accepted, because if I put this suggestion, they would always think that Garg Sahab has some personal interest in this suggestion. So I'm not
Maybe,
going to make, but
maybe.
it should be given. And of course, Dubeji, this faceless assessment in some cases it is causing the great hardship. In some of the cases, we have issued the order very smoothly without there being any addition, and even in big cases, we have issued the assessment order accepting our return income. But there are a few cases in which we are facing the great difficulties. In one of the cases, we have lodged the claim under section 80 double J double A. It is a case of one security company, and we are claiming that, see, look, last year this company had employed 1000%. Now they have employed 1100%, and for 100% we have issued the CA certificate, and we have demonstrated we have met out all the conditions. But despite that, the claim of the assessing officer is that कि sir, see, वो सिक्योरिटी आदमी आपके लिए तो काम करते नहीं हो, तो दूसरे की प्रीमाइसेस में जाके खड़े होते हैं, तो वो आपके एम्प्लॉय कैसे हुए? अरे भैया, एम्प्लॉयर एम्प्लॉय रिलेशनशिप हमारे साथ में है. So in that case, we were forced, rather I should say, that we were forced to provide the appointment letter of all those 1,100%. So it was a very Herculean task for us to furnish all the details in मतलब टेक्नोलॉजिकल जो वो है रेस्ट्रिक्शंस है, वो भी अपनी जगह है. बुक्स ऑफ अकाउंट्स, देयर माइट बी मेनी केसेस की जिसमें मेरी बात को मैं ज्यादा अच्छी तरीके से बुक्स ऑफ अकाउंट्स के माध्यम से समझा सकता हूँ. वो राइट मेरे से कंप्लीटली स्नेच कर लिया गया है. और मेरा पर्सनल एक्सपीरियंस ये है कि ये जो पर्सनल हियरिंग है, ये सिर्फ एक एम्प्टी फॉर्मेलिटी है. मैंने इतने केसेस में पर्सनल हियरिंग मांगी है, और जहां पर भी पर्सनल हियरिंग होती है, वो प्रीसेट नोशन, प्रीसेट माइंड के साथ बैठते हैं कि सब चूंकि इसमें एक्ट में इसका प्रोविजन है तो इसको दे देते हैं, परंतु हमको करना वही हो, तो शायद ऑर्डर भी अपनी ड्रावर में बना के रखते होंगे, और बस हम हमारे से सुनते से उसका अगले रोज उस ऑर्डर को डिस्पैच कर देते हैं. तो इफेक्टिवली जहां पर हमको नई अपॉर्चुनिटी मिल रही है, तो उन केसेस में अब अनफॉर्चुनेटली इस फेसलेस असेसमेंट के आगे हमको फेसलेस अपील में जाना, एंड प्रोबेबली फिर हमको ट्रिब्यूनल में हमको शायद कुछ रिलीफ मिले, और इन टाइम टू कम ये ट्रिब्यूनल भी फेसलेस हो रही है. तो आई डोंट नो कि कहाँ से हम लोग, शायद हमारे दुबे साहब भी कुछ कोर्ट वर्ड से हमको कुछ रिलीफ दिलवा दे. वी आर नॉट एक्सपेक्टिंग मच जस्टिस फ्रॉम दिस फोरम.
Yes, I think just rejoinder to Garg Sahab, this faceless area certainly is going to create the more litigations in view of the lapses on account of that, and certainly it is creating the onerous responsibility on the practicing professionals to have the proper and pinpointed submissions, which generally sometime may not be, since our detailed submission of the issues, we are getting the letters of the department in the details. In that way, we have to be the pinpointed and the submissions with the appropriate documents and evidences. I think the quality of the assessment practice required to be the very serious challenges. What we are the saying as a appellate council from the over the years, the quality of assessment used to be at the submission at the lower level we used to see. But I think there is going to be the enormous responsibility on the professionals. And again, incidentally, the most of important assessments are out of the faceless still. Garg Sahab has pointed out search, seizure, survey, and transfer pricing, and most of important jurisdictional assessment, even the assessments relating to even central circuits are now out. So I think that this is going to be continued, and in that era, unless government is taking it to, I feel that those assessment is still required to be have the detailed books of accounts and explanation, as Garg Sahab has pointed out, that is required. But another way, Garg Sahab, I understand that it is not the benevolent provision for the SSE. It is the more of the department, I feel, less for the SSE. That's why option is not going to available for us in the faceless era. So this is the government has created for himself. I don't, although they have mentioned it is the state of transparency, this, that, talks, a lot of talk about the SSE itself while implementing and introducing this policy. But I don't understand, expect it is the benevolent provision for the SSE at all. Over to Ibrahim.
Yes, sir. Yes, sir. Thank you, sir, for sharing your knowledge on faceless assessment provision. Now, due to paucity of time, we'll proceed further with our other topics. There is the one topic which at the beginning I asked that which amendment which you like that should not found a place in the financial bill. That comes again the provision relating to cash credit, section 68 of the act, and by insertion of the slide is visible.
Yes, yes.
Yes, sir. The amendment proposed in section 68 is that the current provision is that under section 68 provides that taxation of any sum that is nature of share capital, unsecured loan, etc., credited in the books of accounts of the taxpayer if the taxpayer is unable to prove the satisfactory explanation about its nature and source. uh, the amount would be booked under cash credit, and previously the source of the source provision which the assessee has to prove was only restricted to share capital thing, and now they have proposed that the source of the source they have to also prove for the borrowings they have taken. So I request you, sir, to kindly throw a light of wisdom, sir.
Yes. I think just quickly, as far this source of source concept is concerned, uh, rightly as far section 68, all the three limbs were very important: identity of the creditor, genuineness of the transaction, and credit worthiness of again the creditor. And as far the third limb automatically taking us to source of source, it was the over the years. So ultimately the serious challenges were continuing in spite of the fact that Finance Act 2012 made the amendment in respect of the share capital only, not in respect of the loans. But again, which I feel this making the specific amendment which I pointed out at the beginning may going to create more complications and going to create unwarranted litigations, and on the part of, and this going to create certainly the, as I pointed out, section 68 is the since beginning from last 50 years or so, it was the quite bread and butter of the tax professionals and tax litigating councils from over the years, and with the adding the flavor of 115 BBE, it gone further improved it. And I think with the now we are having flavor of 79A to add this, and with this but quickly we can have the view of Garg Saab in the matter, and then we can proceed further, since we have to patch up in next 15-20 minutes, Ibrahim.
Thank you, Dubey sir. इसमें, as you rightly pointed out, that these amendments have in respect of share capital have already been made in way back in the year 2012. अभी इस साल में जो amendment है इसमें we'll have to notice certain very final points that section 68 can be invoked qua any credit entry, whether that credit entry pertain to the share capital or the loan or the partner's capital, or even in respect of any credit entry pertaining to the sale. Now, this amendment is, but the wordings which they have used is the word loan or borrowing or any such amount. So it will, this new amendment would apply only to the loan or borrowing or any such amount, and not to the advance. We'll have to take into the consideration the theory of wisdom generis. So अगर हम इसको पढ़ते हैं तो लोन या बोरोइंग, या अब इसमें पार्टनर्स की कैपिटल अगर आ रही है तो पार्टनर्स कैपिटल कैन नॉट बी इक्वेटेड with the terminology of the loan or borrowing or any such amount. Or similarly, if I accepted the advance from any of my customers, then probably this would also not be covered in those cases. If I have made the realization from some debtors, then it would also not be covered under section 68. Now, very interestingly, again, I'm saying you that why the maintenance of the books of accounts is more dangerous. Many courts have held that that if you are not maintaining any books of accounts, the provisions of section 68 cannot be invoked. It is there because the maintenance of the books of accounts and the finding of credit entries therein is the sine qua non for invoking the provisions of section 68. Now, if supposingly instead of maintaining the books of accounts of ordinary businessmen who can avoid the maintenance of books of accounts, और उसके केस में अगर if he is not maintaining any books of accounts, then correspondingly supposingly he has made the investment for purchase of some immovable property, then in that case the provisions of section 69 or section 69B can be invoked. But for that purpose, I am not required to prove the source of the source. For the purpose of the section 68, I am required to prove the source of the source. So if supposingly I have made investment in certain property, और मुझसे पूछा जाता है, मैं बोलूंगा कि सब मेरे को पैसा वीएन दुबे साहब ने दिया और वीएन दुबे साहब के से रिलेटेड सारी चीजें ला दी, या मैंने कोई एनबीएफसी कंपनी से लोन लिया है, मैंने एनबीएफसी कंपनी का लोन एग्रीमेंट दे दिया, उसका रिपेमेंट शेड्यूल दे दिया और सारी चीजें दे दी, तो मुझसे अब ये नहीं पूछेंगे कि अब एनबीएफसी कंपनी कहाँ से लेके आई, अगर सेक्शन 69 में मैं लेके जाता हूँ. और सेक्शन 68 में अगर इफ वी ओवर स्टेज दिस पर्टिकुलर अमेंडमेंट, then they, even in respect of the NBFC companies, they can inquire the source of the source. So in any case, but ये provisions अभी आया, किंतु हम जो लोग practical field में work कर रहे हैं, we all are aware of that even in the present era we are required to establish for the purpose of establishing the creditworthiness of the loan creditor, we are required to establish the sources where from the creditor has got the funds to provide me the loan or advances. But certainly it is going to open a new Pandora, and now the assessing officer would be well within his statutory and legitimate right to ask me about the sources in the hands of my creditors, and he can either issue the summons under section 131 or a notice under section 133(6) and call for the necessary information, and we'll have to ensure that it is not only we, that even our creditor is in a position to substantiate his explanation along with all the necessary documents. So we'll have to be very watchful and cautious that if any notice or any reply is made by our creditor, then it should be to the satisfaction of the assessing officer. This is what my comments on this section.
Yes.
68.
Yeah. Yes, sir. Now moving further with the session.
Mr. Ibrahim, I think we are very close. Let us take the last this business restructuring.
Yes, sir.
And then you can share the PPT to all participants.
Yes, sir.
I think we are already going to close it now, and then we can have some quick question answer if required. Time permits. Otherwise, yes, Ibrahim, you can go ahead. Garg Sahab,
Yes.
I think with your due permission, this
Yes,
business
yes, sir.
restructuring
Yes,
we can close. And
Yes, sir. Yes, sir.
Since Ibrahim has selected number of topics,
Yes.
2 hours were not sufficient for that. It was whole day discussion was required. And in the light of the valuable inputs and planning tips given by the Garg Sahab, it requires further more time to elaborate and discuss. It can be a whole day discussion. Yes, please go ahead, Ibrahim.
Yes, sir. With this topic, by introduction of a proposal to amend the section 170, which will impact on the assessment proceeding on predecessor entity pending during the restructure proceeding. And with this, we have found that this particular proposal is going to dilute the jurisprudence which has been fixed by Honorable High Court and Supreme Court in a plethora of matter. One of the matter in which Maruti Suzuki India Limited case, in this particular case, the Supreme Court has says that any notice issued on the debt company is not permissible and assessment.
Non-existing entity.
Yes, sir. So the Supreme Court has just affirmed the judgment of Spice Entertainment, which was held by Honorable Delhi High Court. So by proposing this particular amendment, they are going to dilute the jurisprudence of the particular judgments. So I request Vendubi sir to kindly show the light upon this particular provisions.
It may be taken after, Ibrahim. Let us finish other topics first, because it would not be of the great interest for many of us.
So I think just quickly we can close. As Ibrahim, basically this amendment was being creating the serious challenge for the department in case of the we are having the merger. Suppose in the 1st April we are getting some order appointed date of April 21 after a year and after 2 years. When the department is coming, then this judgment were coming to rescue of the SSCs and key non-existent entity, as Garg Sahab has rightly pointed out, and then they cannot have any recourses. But in the era of the procedures prescribed for merger amalgamation under Companies Act, we have to take the approvals and all these, an online portal available with the informations. Department is having all things. If they have ignored it, they are having a right to, they cannot have recourses. But I think to come off there, all these things which they are not able to handle, these amendments are proposed, and on the successors, that is one part. Again, certainly along with this, they have made the amendment to 178 in respect of the IBC related entities. Just quickly, I would like to wrap up in this matter also. But again, the IBC related matters are not being taken in the right spirit still by the department, where the section 31 of code talks about it is going to have we are reaching to the clean slate theory concept. Number of codes, if I'm making 100 crore and acquiring certain resolution plan, let us close the past. And the number of persons are sacrificing, the government is one of them, and the bank are having haircuts of say 70-80%, even operational creditors and everybody. So I think that is closed, but ultimately number of amendments in respect of IBC are still, although government has made the number something, but are still require the clarity. And one is the positive amendment in this, that they made the modification in respect of the demand is appearing in case of the transfer companies and all this, that has to be automatically. This is the procedural correction being done by them. But I was expecting for some more amendment which is going to have the hardship on the part of SSCs, whether the inspect of the transfer of assets by in the hand of shareholders or recipient and these that, the certain amendments are already there, but the number of challenges where we are already facing in respect of those resolution plan and restructuring things, I think those are still required to be addressed and in the years to come. Yes. Garg Sahab, any topic, if you can just suggest which we can close, you can give the final view and we can close.
What has been left out now? Ibrahim?
Sir, the TDS and TCS provision and VDS, virtual digital asset provision, which was the highlight of the
Section 194 IA. The slide which is Section 194 IA is very plain and simple. That now we all are aware of that any transaction in respect of seller purchase of an immovable property exceeding a value of rupees 50 lakhs, you are required to make a deduction at the rate of 1% of the value. Now instead of the value, they have shifted it to the stamp value, whichever is higher. Because many times the government feels that although under the Section 50C, the income is higher, but the TDS is being done only on the amount which is stated in the register sale deeds. So in order to plug that lacuna, they have provided for. But now there is one concern to me, that in existing section 50C or section 143CA, there is a tolerance limit of 5 to 10%. Because if they says that if the consideration, the difference between the consideration in stamp duty value, earlier it was 5%, then 10%, and in the COVID era in respect of certain property, it was raised to the 20%. So that tolerance limit is available only for the purpose of computation of income under section 50C or section 43CA, but no such tolerance limit has been prescribed while bringing this amendment, and still you would be required to make the deduction at the prescribed rate under section 194 IA on the either on the stamp duty value or the sale consideration, whichever is higher. So this is all about section 194 IA.
I think one small challenge, Garg Sahab, I am looking in this way. Instead of installment of properties, the section was introduced to just track the transactions for TDS.
Yes.
It is not the actual. As you pointed out, there 50C is already there, are provisions to take care of that. What is need to enlarge this provision 194 IA and going to create more hardship. If I'm making the installment payment respect of the under construction properties, and this is going to, again, you rightly pointed out that there is some limit is there. So I think the TDS provisions should not be used, is going extended for the assessment, which I feel may not be appropriate.
No, Dubeyji, to my mind, the practical purpose for bringing this amendment is that because what is happening today, that the information which are appearing in section in 26 AS is not getting matched with the information which are being sent to the department by the registrar of the properties, because what the registrar of properties people do, that they simply state the amount of the stamp duty value. They don't state it, because we all are aware of that in respect of every transaction exceeding a value of rupees 30 lakhs, the sub registrar property send the information to the department, and that information is reconciled with the return filed by an assessee. So what is happening as of today, that and even in many of the cases we have found, found that the stamp duty valuation is 45 lakhs rupees, but I have shown the value supposedly of 40 lakhs rupees, then they are showing the notice that you have not shown the entire 45 lakhs rupees. Then probably this could be a reason, that since the information is being sent by the sub registrar on the basis of the stamp duty value, and so as to meet that. But again, it would pose a question that when the guideline value is 45 lakhs rupees and I am sure making the deduction and 50 lakhs rupees, then still there would be a mismatch. So how it would be, but and secondly, as rightly pointed out by my learned friend, that this could not be an aim to collect the more revenue, because the 1% is quite a meager amount. But in any case, one will have to take into account that the TDS has to be done at the stamp duty value. Ibrahim ji, next.
Just quickly, I just would like to throw some amendment proposed by way of insertion of section 194R. Over the years, in last 2-3 years, the TDS and TCS provisions are become so enlarged. Earlier, now it includes everything and anything on the business related transactions or even the personal transactions. Even the earlier, we used to say if the TDS there, then certainly it is the service oriented product payments. Since government is very confident as far as the sale is concerned, they will be able to track from the sales data. But now even the sales related transactions are also being covered, subjected to TDS and TCS. And nothing is left now. It is too wide provisions today, which a friend may end on one day. Only high value corporates or high value HNIs should be subjected, and so you are mandatorily required to file the return, and other are just simply they have increased the TDS and TCS rates, and if you want to have a refund, then you are having optional to file the return. So I'm very scared that this may be coming a end of the day कि भाइयों और बहनों मैंने सबको मुक्त कर दिया है. इस देश में 5 करोड़ या 4 करोड़ लोगों की जगह पर केवल अब 40 लाख लोगों को ही रिटर्न भरने की जरूरत पड़ेगी. But government, simply I find getting deducted 194J TDS by my clients, they will just advise to deduct 20% or higher amount, and I need not to file any return. The government will be getting the more revenue. As Garg Sahab has initially made, we have already crossed 1.4 lakh crore collections in the taxes, and the similar may be having. So I think TDS and TCS provisions are so widened, and it is a normal business. It is very difficult to make the compliances of that and make the system oriented deposit and all these. Again, if you are failing for non-compliances, even we are having now judgment of Bombay High Court and the prosecution, I'm doing some service, and for the department, I've deposited the TDS amount with interest and everything. Now I want to put me behind bar also for such small delay and all this. I think the TDS and TCS are going to be the drive everything of the as per this Income Tax Act. Again, this 194, I'm scared how it is going to take us. So I think, according to me, this may prone us to take all the payments in the 28 subsections in class 4, even business payments, which is, according to me, were out of the purview when we are literally examining the TDS provisions. So I think if I'm paying may affect the AOP arrangements also, and all these. If I'm doing the business in the two parties on business being done by one in the and transferring his share in other way, I think it may be tracked and under 194R, read with section 28 subclass 4. Over to Garg Saab to have some special comment on this.
Rightly pointed out by my learned friend that they are bringing everything, but really it puzzles my mind that still they have not brought into the ambit of TDS provisions any amount issued under section 56. अभी भी ये शायद ऐसा ला सकते हैं कि अगर दुबे साहब को 10 लाख रुपए किसी से गिफ्ट मिलती है तो वो भी कोई 20% का TDS
काट के देगा,
क्योंकि अभी भी कोविड के लिए अगर हेल्प मिलती है, आपके कोई डेथ हो जाती है, तो 10 लाख रुपीस तक का उन्होंने सेक्शन 56 से एक्सक्लूड करा है. बट बड़ी खुशी की बात है कि उसके लिए वो TDS के प्रोविजंस को नहीं लाया. बट सो दैट इज प्रोबेबली इन अनदर 1 to 3 years सेक्शन 56 को भी शायद ये उसके एम्बिट में, TDS के एम्बिट में ले आए, जो अभी नहीं है. और नाउ ये 194R का जो इंटेंट हमें दिखता है वो सेक्शन 37 से इसको कनेक्ट करा है कि जो एक्सपेंडिचर जो जैसे मेडिकल ये फार्मा कंपनीज कर रही हैं डॉक्टर्स पे, या हम देखते हैं नॉर्मल ट्रेड में भी कि आफ्टर अचीविंग ए सर्टेन टारगेट मेनी डीलर्स आर डिस्ट्रीब्यूटर्स आर एंटरटेन्ड बाय देयर मैन्युफैक्चरर्स टू गो अब्रॉड. तो अब इसमें होता यह है कि सामने वाला जो रहता है वो तो उसका एक्सपेंडिचर क्लेम कर लेता है, किंतु जो डीलर है या उसका रिप्रेजेंटेटिव है, उसने अगर फॉरेन ट्रिप या उसको कुछ भी फ्रीबीज मिली है तो वो कहीं से भी उसका टैक्स के स्ट्रक्चर में नहीं आती, जबकि ये परक्विजिट है सेक्शन 28 क्लॉज 4 में. तो उसकी इंफॉर्मेशन पर ट्रैक करने के लिए ये सेक्शन 194R लाया है कि भैया अगर आपको एक्सपेंडिचर क्लेम करना है तो आप उस पर ना बाकायदा TDS काटिएगा, और अगर वो उसका आपने इसको सिंगापुर भेजा है पूरा का पूरा ये हुआ हो तो भी अब आप ये इंश्योर करिएगा कि जिस आदमी को सिंगापुर भेजा है उस आदमी ने उस परक्विजिट पे टैक्स भर दिया या नहीं भर दिया, ये आपकी जिम्मेदारी होगा अगर पूरा काइंड में. तो बेसिकली ये प्रोविजन सेक्शन 194R उससे रिलेटेड है. और टू इब्राहिम.
Yes, sir. There are one VDS provision is left, sir, and if you permit, sir, we can.
VDS provisions के लिए इब्राहिम we have already talked about कि they have not used the word this cryptocurrency anywhere, and the government in their budget speech, the finance minister has said that the government is coming with its own digital assets through Reserve Bank of India, and they have provided that any gain arising from the transfer of any virtual digital assets VDA will be subjected to tax at the rate of 30%. Then again it can be anybody's case whether and it has further been provided that against those receipts no deduction except the cost of acquisition, and cost of acquisition and not the indexed cost of acquisition. It is only the cost of acquisition which will be allowed and no any other expenditure would be allowed. Then the certain question arises that under what particular head this income should lie, whether it is the income from business or income from the capital gain. According to me, if there is a person who's carrying out dealing in the VDA as a systematic activities, then any surplus or gain derived by him from these activities should be subjected to tax under section 28 from income from business or profession. और अगर वो एक investor है तो probably under section 45. In the act they have not clarified that under which particular section this income is going to fall. And then there is a corresponding provision, and there is a corresponding provision that there would be a requirement of 1% TDS. I don't know that how the government would be in a position to keep the track record of this 1% TDS, because इसमें हमें मालूम भी नहीं पड़ता जिस तरीके से एक्सचेंज में होता है कि कौन आदमी सेल कर रहा है, कौन आदमी परचेस कर रहा है. वी विल नेवर नो द आइडेंटिटी ऑफ द पे. So these all would be the challenges, and the government is yet to announce the scheme for implementation of all these schemes. अभी भी हमें नहीं मालूम है कि वीडीए किस तरीके से ट्रांजेक्ट होगा. इसको बुक्स में मुझे तो सबसे पहले तो अभी ये बात समझ में नहीं आ रही है कि गवर्नमेंट, अभी कहीं लोग, कुछ लोग सोच रहे हैं कि साहब वीडियो अब तो बड़ा लीगलाइज हो गया. अरे भाई, गवर्नमेंट सबसे पहले तो आपसे उससे सोर्स पूछेगी कि आपके पास में जो क्रिप्टो करेंसी आई है, जो आज आप बेच रहे हो, तो पहले तो बताओ कि भैया ये आई कहाँ से थी तुम्हारे पास में, और इसका सोर्स क्या था. टैक्स 30% की बात तो बाद में आएगी, क्योंकि अभी तक तो क्रिप्टो करेंसी चूंकि हमारे इंडिया में लीगलाइज नहीं थी, तो कई लोगों ने तो इसको इलीगल चैनल से खरीदा. तो इट विल बी वेरी डिफिकल्ट फॉर देम टू एस्टेब्लिश, मतलब दे आर प्रिपेयर्ड टू पे द टैक्स, but it will be very difficult for them to establish the sources of acquisition. मतलब sources of acquisition not in the monetary terms. आपको ये, आपने एक्वायर कैसे करी, ये इलीगल एक्टिविटी थी. और दूसरा, आपने इसका फंड्स ट्रांसफर कैसे करा, वेदर बाय वे ऑफ हवाला और एनी अदर रूट. तो एक बहुत बड़ा क्वेश्चन मार्क इस पे आएगा. टैक्स इतनी बड़ी बात नहीं है इसमें, इसमें सोर्सेस और उसको एस्टेब्लिश करना बड़ी बात होगी. और इसके बाद में 1% TDS वाली जो बात है, वो इसमें अपने आप में चैलेंजेस रहेगा. फिर इसमें एक तीसरा इशू है कि इसमें लॉसेस अलाउ नहीं होंगे. तो एक क्वेश्चन ये आता है कि वेदर income generated from the one VDA and the assessee in the same year has incurred the loss from the other VDA, whether both would, one can be, the loss can be set off against that income or not. So whether the VDA, there would be the different process of the VDA, and the income, net income falling under a particular class of the VDA will be taken, or every item will be taken separately. It is anybody's guess as of now, because this is quite a new concept, quite a new provision. So it will certainly give a room for the lot many litigations. This is what my opinion about this video.
Yes, just to add, just to have the small addition, that I think it is a new concept, as Garg Saab has rightly pointed out. But the one special class is created, unique class in the taxation we have created. Earlier we were having the special class speculation losses. Even in that, all speculation income are allowed to be carry forward, set off, and all these. Now, but this in this unique class, you are not required to be, you are not allowed to set off and carry forward. As far the question is concerned, I am dealing with the two transactions of the virtual assets during the year, whether the loss of one can be set up with another. This is the continuous discussion is going on since the section is talks about the virtual assets. According to me, the provision of subsection 2 class B talking about computed under any other provisions of this act has to be read together. And according to me, all the VDS income particular year are required to be losses and gains can be set up for the year. Certainly the no carry forward would be allowed in this case. And certainly it is going to be the more rigorous than the speculation losses, what we have seen. That is, and again, Garg Saab has rightly pointed out, in case of capital gain transaction, how you are going to determine the cost in number of cases. So certainly the entire proceeds may be going to be subject to the challenge. And apart from the other litigations, the how the amount, if you want to claim anything, either you have to show it is a zero, nothing you have received when zero, you have received, it may be the gift and all these. So you have to challenge under 56(2) and all these. And at the same time, if you say, I have received, what can be situation for capital gain calculation, that is certainly is going to be the matter of litigations and challenge. I think with this, over to Ibrahim, I think we can close the session today.
Yes, sir. We have certain questions from our participants, out of which answer of two questions you have already given. That one question was that how can the government track the TDS, which is going to be deducted on VDAS transactions, and thereafter whether the set of losses from one transaction of VDAS can be set off from another transaction of VDS. That sir has already gave the answer. Another question which our participant has asked is from retrospective effect, the reduction of goodwill from block asset is now going to be deemed as transfer. So the particular thing here, the income is not going to be generated. So how can without income they can charge income tax? That reduction of goodwill they can charge income tax. How? What is the constitutional provision, sir?
Over to Garaksha. I think it is the current year situation only. And
Dubey, first of all, matlab, I am still trying to understand that why any person would like to reduce the amount of goodwill from its books of accounts. What purpose is going to be served? Matlab, I could not really,
yes,
but I am still finding
yes,
the reasons why anyone should, because they have restricted the charging of any depreciation of the goodwill. That's fine. I would not be charged.
but Garaksha, this may be situation in case of merger, amalgamation, and restructuring cases where the something is zeroed. Accordingly, I think somebody is trying to make the point out that something is zeroed in the books of account during process of the transfer
Then
and merger.
the reduction rate shall be, although for the purpose of section 45, there has to be a transfer, and it is a solitary activity. I am not transferring anything. Merely I am passing certain entries. I am reducing the amount of goodwill in my books of account. It should not tintam, because in a very old judgment of Kikabhai, the Honorable Supreme Court, when it was a case related to the conversion of the capital asset into stock in trade, before insertion of provisions of subsection 2 to section 45, the Supreme Court had given a view that merely by way of converting the capital asset into the stock in trade, no capital gain arises to the any assessee. Because for the purpose of any transfer, there has to be the priority of the person. There has to be at least two persons, one transferor and one transferee. And here there is no question of any transfer. There is only I am passing the entries in my books of accounts and I am reducing it, but the law has contemplated that it would be treated as of my income.
Yes, sir. There is another question from the participant that restricting filing of a further appeal if the question of law is identical to a question is identical to the one pending before the High Court or Supreme Court, that how can this particular question be decided, and how the issue of what will be the fate in cases where the appellant has drafted more broader question of law. So
the similar provisions were also there. An option has also been given to an assessee that if the similar matter is pending before the a higher forum, before the High Courts or Supreme Court, then if any appeal is fixed before the tribunal, then he can file a form and he can say. But this option was available to the assessee as well, and by that form, one was required to declare that his matter on the similar question is pending before the High Court or the Supreme Court, and he has to make a declaration that whatever the decision comes, he would not go for the further appeal, and that decision would be binding on on all the subsequent cases. So the similar provisions have been made in respect of the appeals by the revenue, and they cannot, according to me, they will have to restrict themselves to the issue pending before the High Court. They cannot frame any question involving a larger question or the question which is already pending before the courts.
Moreover, it is the option of the SSE. If if SSE wants, in some cases, I don't want to have even the repetitive become the respondent in the matter. If it is the option, if the consent is given by the SSE, the department may not be filing those appeals. It is not the obligation on the SSE. It's option on the SSE to give consent in the matter looking to the facts of the case, looking to the grounds, whether I'm comfortable, if something coming otherwise, I would be agree. It is a consent, but it is not the at all obligation of the SSC. If Ibrahim is looking, I'm not comfortable with this question of law, then certainly he cannot sign. It is the option. If you are happy, okay, I want to avoid, I want to reduce my litigations. If something coming tomorrow, whether in my case or somebody else, I would honor it. So I think
it is not mandatory.
It is the option given to the SSC. Unless SSC consent department cannot take that benefit. But the SSC has to examine on the case-to-case basis whether I'm comfortable or not. I think Ibrahim,
Yes,
thank you. Thank you very much, Garg Sahab, for giving the valuable inputs, and it was a very quality interaction and very.
Thank you. It was really my
Yes.
pleasure indeed. Thank you. Thank you very much.
I am also delighted to share this podium with two veteran and luminaries of in this particular field. I feel very privileged and delighted, sir. I now request Nitisha to for vote of thanks.
Again, the last thanks to Ibrahim for making this interaction more meaningful, more meaningful and interactive.
It is your greatness, sir, that you think that, sir.
Thank you, sir. To conclude this enlightening session, I, Nitisha Dhariwal, on behalf of JMVD Legal, take this opportunity to thank the panelists, Sir VN Dubey, Sir Anil Kamal Garg, Sir Ibrahim, Sir. For this informative and enlightening session, I also thank all the participants for being patient listeners and for bringing forward such enlightening and informative questions. I also thank Team JMVD Legal, Law Internship and Indian Lawyer Association for organizing such an informative event. Thank you, everyone.
Thank you.
Thank you very much.
Thank you, sir.
Thank you.